All right. Well, Brian, we have mentioned already that we're in the thick of earnings season. So let's talk about some earnings. Teladoc Health, a big telehealth provider, reported its Q2 results after the market closed on Tuesday of this week. Are there any things that you noted in the company's update that investors should especially pay attention to?
Yeah, I mean, the top line looked great. Revenue was more than doubled, and visits increased 28% year over year. And management increased its guidance to 2 billion to 2.025 billion. But investors seem to really be paying attention to the bottom line, which didn't look quite nearly as good. The net loss was 134 million, which was substantially more than the 26 million in the year ago quarter. Livongo stock awards that continue to invest after the merger definitely hurt the company. Um, it also had higher amortization of acquired intangible assets from Livongo and from another acquisition of In Touch Health, and then exchange of convertible senior notes in the second quarter of 2021 also hurt the company. So, looking forward, things seem to be potentially improving on the bottom line. So the second quarter, the loss was 86 cents per quarter. Third quarter guidance is for a loss of 68 cents to 78 cents per share. So that's better than the 86 cents per share in the second quarter. And then if you do the math for the fourth quarter, you get that they're going to lose potentially 76 cents at the highest and possibly as low as 51 cents. So going from 86 cents to 78 cents to 76 cents, at least they're headed in the right direction, but they're still going to be losing money this year. And I think that's what the investors are mostly focused on. And the stock didn't do so well after it released earnings.
Yeah, I think at least at one point, I haven't seen where Teladoc stock is right now, but I think at one point it was down around 8%. Um, this is a stock that if you looked at its bottom line, you would say Teladoc just stinks, right? I mean, it's losing money. It's the bottom line pretty poor. But I think this is the kind of stock that you really need to ask why. Well, why is Teladoc losing money? Well, like you mentioned, Brian, a lot of it has to do with the company's acquisition of Livongo and its acquisition of In Touch Health. And so if you believe that those acquisitions position the company better for growth in the future, then this one quarter or several quarters of losses aren't as big of a deal, right?
Yeah, I mean, I think, generally speaking, when you're looking at a growth company, looking at the top line, the growth in the top line is much more important than looking at the bottom line. But at some point, companies have to become profitable, and so I can see how investors are somewhat focused on the bottom line as well. But I think if you're a long-term investor, you don't necessarily have to be worried too much right now. The fact that they're growing revenue quite well and growing the number of visits to doctors is definitely the thing you'd like to see in a high growth company.